Hello, everyone. Welcome, everyone, to the FinTech and Innovation panel. We're talking about Digital Africa is Now. And thank you, Sarah, for introducing me. And I would love to give the time to my lovely panelists here with diverse expertise to introduce themselves. So let's start with Frankie.
Thank you, Lily. Good. Sorry. My name is Frankie. I'm the counsel at the which is a law firm in Francophone Africa. We do a lot of work in Francophone Africa. Our practice area covers mining, oil and gas, banking and finance, and anything in between. I'm quite happy to be here.
Amazing. Demola?
Hi, everyone. My name is Demola. I'm a partner at 500 Global. 500 Global is a US VC fund that's been investing in emerging markets for the last 15 years. And we, beyond sort of providing venture capital funding, we also do structured programming. We support founders with accelerator programs. We help them scale across different regions. And we've been investing in Africa for the last 13 years. We have about 25 investments in Africa. And we're very excited to be doubling down on Africa at a time when sort of global capital is retreating.
Amazing. Thank you so much. Uwem?
Hi, everyone. I'll capture what I do as I speak to interesting people for a living. And I do that as the head of investment at Launch Africa from various founders that are building interesting businesses across the continent and solving basic problems that are oftentimes overlooked to LPs who are looking for an African allocation or looking to invest in the growing market that Africa is. That's pretty much it.
Thank you. Hannah?
Hi, everyone. I hope you're all well. My name is Hannah Kihenjo. I take care of savings and wealth management in M-Pesa Africa. For M-Pesa Africa, we provide mobile money, payments, financial services across the continent, 7 countries. And I'm excited to be here. Looking forward to an amazing engagement. Thanks.
Great. Brian?
Thank you. My name is Brian. I'm a partner at Novastar. We are a venture capital fund investing in early stage, growth stage companies in Africa that are solving problems facing the mass market in Africa, where commercial success aligns with social and environmental impact. We've been doing this for a long time, one of the first VC funds at scale on the continent. Today managing 3 funds based across the continent, and really looking to support and partner with exciting entrepreneurs, and looking forward to the conversation.
Amazing. So this panel is quite interesting because we've been talking about AI, fintechs. We're talking about investment in fintech, to be honest, for this entire panel here. But I think for this particular session, we'll be hearing about real case studies, real ways that they have actually leapfrogged, which is one of our themes. So leapfrogging and leading is one of the sub-themes for the first conversation. And then the second conversation will be about scaling capital and connectivity. So it's really amazing. I love to hear a lot about what they have to offer to this panel specifically. So I'm going to start here with Hannah. So Hannah, M-Pesa has been the original African leapfrog, right? To achieve global leadership in financial innovation, how is M-Pesa next generation product strategy moving beyond mobile payments? So examples is savings, wealth, insurance to deliver true financial health for the mass market.
Thank you, Nini, for that. So we expect by 2050, we expect that there'll be 2.5 billion people from Africa,
Amazing.
Adults. Yep. And we expect that out of the 2.5 billion, 60% will be the youth.
Yep.
So what that means, it means that there's a youth who will be digitally native and will expect solutions that help them to be able to have true financial health. As it is today, what we are seeing is that, yes, financial inclusion and financial health has improved on the continent. We've seen from the Global Health Index 2025, 40% of the adults do have a formal account either on mobile money or on a bank account. But despite this, we're seeing that actual gross domestic savings have gone down from 2023 to date. So in sub-Saharan Africa, we're looking at negative 5% on gross domestic savings as a percentage of our GDP. So that means, yes, financial inclusion has gone up, but we need to improve the state of financial health. So how do we do that? Venturing into savings, wealth, insurance. Some solutions that M-Pesa has ventured into that has helped with that is Mkoba in Tanzania. It's a digital platform for group savings. 65% who use this, women. It has improved transparency. We're able to, women groups who are traditionally able to save in the first place in Africa are able to access this and use this solution. We've also seen in Kenya, there's Zidi, Mobile Money Market Fund, that the customers can be able to invest as small as 70 cents on the dollar as their first investment.
Amazing.
That way, people are able to educate their children. They're able to get working capital going. They're able to make their first move towards an investment and towards a savings that can be able to improve their financial health.
Great.
Yeah.
Thank you so much, Hannah. And this is really amazing to see that, products are moving from the traditional transactions from traditional banks. So we always think about fintech as just traditional transactions from one place to the other, one account to the other, building wealth for the digital ecosystem. Brian, I wanted to ask, so you've backed major fintechs. What is the one non-obvious sector, i.e. agri-tech, logistics, that you see becoming fintech-enabled and represents most compelling investment thesis for your fund right now?
So we've already been doing this, so it's not necessarily something that we're seeing new emerge. It's something that we've already been seeing happening, and we've always thought about fintech today as sort of fintech 2.0. And maybe some people argue this 3.0, but I think it's 2.0, where the rails were built thanks to folks like M-Pesa for payments, but whether it's lending, credit assessments, there's all sorts of things that you need to have as a foundation before you can build on top or offer other services, right? Because fundamentally, if you're going to start financing assets, you need to be able to get paid and to pay, right? You need to be able to track, to evaluate credit, to recover, all sorts of things that operationally become impossible if the rails don't exist. And so I think the continent has made a lot of progress in building those rails, and we are excited to back companies like that, like MoneyPoint, for example, that's done really well, and the others as well. But today we're really excited about embedded finance, and I feel like it's sort of a catch-all, but there are products or services that the mass market in Africa still need but will not be able to afford if the payments are required upfront, whether it's mobile phones or energy assets or mobility assets that we think today can benefit from financial services of a fintech layer and embedded in that asset to then provide that access. And that's only one part of the problem. And then the next part of the solution, also one part of the solution. The next part of the solution is how do you then build infrastructure or a team or an operational machine that can deploy these types of assets and track them and make sure they're productive. And so we're really excited about that. We obviously, with our third fund, are more focused on the nexus of climate, social, and commercial. And so we are more focused on climate tech, especially, and so we've made a lot of investments in electric mobility, whether it's in companies like Basigo in Kenya and Rwanda doing electric buses, or Green Wheels, in Kenya, or Max in Nigeria doing electric bikes.
Great.
So that's the sort of where we're playing, and we're sort of interested in seeing what's next, because we think there's an opportunity to leapfrog, to use the language.
Leapfrogging. So following that, so Launch Africa reviews thousands of deals annually across Africa. What's the single most compelling technology innovation you're seeing African fintechs use to solve our continent's unique challenges? And what's the biggest reason you think they fail to reach Series A? And what do you think we do differently to change that pattern?
Thank you very much. That's an interesting question. But I would like the audience to talk to me here. How many of you feel like there's so much allocation to fintech on the continent? Too much money goes into fintech? One person, two people, three people? Okay. With what? Okay, how many people feel like when we talk about fintech, everybody thinks payments and remittance? Okay, good. Oh, we're on the same page. What other subsectors of financial services or technology have we not touched? Just somebody say it out loud. Anyone? Anyone? Investing. Who else? FX? Leverage? Anyone?
Housing finance.
Housing finance? Anybody? EdTech. Okay, one last one. InsurTech. Wonderful. So again, to sort of answer the first question I throw out, there's so much innovation happening in this space. We just unfortunately focused on the shiny toys, which is where most of the returns happen. However, as investors and my co-investors on this panel will say, there's much more that's happening. There's a lot of innovation happening in the ecosystem. Fundamentally, the problem is quite a number of the founders that are building in this space, one, forget that when you're building, you have to build with the assumption that the underlying infrastructure will fail. Because we're talking about Africa here. You're not building under perfect conditions. You're not building in situations where regulators are always on your side. And so the mistake is a lot of founders going, with all these great ideas, with their nice technologies, and forget that your customers may be offline, or there might be a lot of downtimes. To the consumer, he doesn't care. He wants to either maybe buy an insurance product, it doesn't work. To him, it doesn't work. To you, you're like, but the underlying product, works. Unfortunately, in Nigeria, what is the payment switch? NIBS is down, and NIBS is always down, unfortunately. So, unfortunately. But yeah, the reality is a lot of founders forget that they're building for the continent and miss out on that context when they are building for the market. The age of the market, the underlying infrastructures that exist to power that market, the spending power of that market, and they just, paint a broad stroke and think you're building for, say, Silicon Valley market, type of customers who will just get an app and start using your products or services. I think the second thing that we see and we try to solve for when we speak to founders is they want to scale real quick, but forget that it's good to have a Pan-African focus, but it's great to have a hyper-focused or hyper-local focus. Build depth, understand the market better than anybody, then start thinking about skill. A lot of these founders think geographical skill too fast. You've not sorted out for your unit economics, and the next thing you want to move to the next market. It's beautiful when you pitch to investors. I, for one, we look for scale. But in the end, does the underlying numbers make sense? And unfortunately, a lot of founders don't look at the underlying numbers. They look at, that top-down approach. 50 million people across Africa do blah, 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 blah. In other words, 30 million of those are my customers. It doesn't always work that way. And at launch, what we try to show founders is, yes, the market exists in the sense that there are a number of young people, it's a growing population, a lot of people have access to mobile devices, but can you actively close these customers? And then the last thing I'm going to mention is a lot of people just switch their business models real quick when they are hit with a brick wall. So you find B2B businesses switch quickly to B2C customers because obviously you want to ramp on revenues, or B2C businesses, retail businesses switch quickly to B2B because, well, you need to close larger ticket customers. But in the end, because they've not built that sales muscle, they've not figured out how to sell to the customers and close them, they are stuck, and their companies become zombies and eventually die. So when we talk to founders, we are fundamentally trying to figure out with them, does the market exist? is this the right time to build it? Even if it's not the right time, is there a path to some sort of sustainability or profitability? Is there an ability for us to help you scale your business between 12 to 24 months? And then finally, do you have insights as the founder? Do you know about the market more than anybody in your space? Because one of the things I tell founders is if I end up in a call with you and I don't learn anything new, the probability of us having another call is zilch. Because I want to get into a conversation and tell myself, man, I need to go back to this guy. He apparently knows more than fintech than I do. He apparently knows more than this space than any of us in the team do, which means he has insights that will help him beat the rest of the market.
Amazing. I think this is really good topics because, I mean, starting from looking at the mass market with M-Pesa, where they have the Incoba, whether it's looking at how Novastar is really supporting the founders in embedded finance and looking at the challenges and how to resolve them, whether it's UMEM, where he's saying that they should actually research more and look at how they can be more hyper-local when they're doing their research instead of just going into the market. I think Africa has really set itself a standard and it's really now a digital Africa right now. So I'm going to pivot a little to scaling, capital, and connectivity. I think the challenges and opportunities in these particular sectors are really important for us to look at this because it's a fragmented market. I mean, if you all think about it. So I'm going to come to you, Frankie. So your work spans over Francophone Africa jurisdiction. Now, what is the single biggest legal or regulatory hurdle? Cross-border remittance, compliance, the other law that is holding back the vision of a truly unified digital Africa for fintech.
Thank you, Nini. In my opinion, the biggest hurdle to achieve this harmonization, this unification, is the lack of, harmonization in terms of laws and regulations governing fintech in Francophone Africa. Now, to be clear, there are regional blocks in Francophone Africa that have achieved a good level of harmonization. I'm thinking about the West African Economic and Monetary Union, for example. In terms of e-money, the regulations are at a regional level, which means that e-money rules are the same in Benin, for example, in Burkina Faso, in Ivory Coast. The harmonization is at a good point, but it is not complete. For example, the member states of the YMU, they have their own local laws in terms of personal data, for example, consumer protection, cybercrime. So yes, the harmonization is not complete. Now, I appreciate that harmonization seems a bit utopian, but I think if there is political will, it can be achieved. But let me give you an example. For example, in the Hoada zone, we worked on multiple transactions in the past where, there are a lot of companies scattered across the Hoada jurisdiction. And you need, within the transaction, to secure, for example, a loan. And then you need to take security over the assets of those companies, right? What happened is that we managed to do it pretty quickly, efficiently, smoothly, seamlessly, you name it, because, simply put, everything is harmonized at the Hoada level in terms of security. I appreciate it's not really relevant to fintech, but that is what I think is really, really good with harmonization, and Francophone Africa is not there yet.
Yeah, thank you so much. It's really interesting you talk about harmonization because I think, yes, I know you play in the space of Francophone, but I think it's also a similar case also in West Africa as well. So let me come to you, Demola. It's a really interesting topic since we're talking about, scaling and connectivity. So VC funding in Africa has faced global correction. From global firms' perspective, what structural change in African markets, be it public sector support, governance, or reliable liquidity, would signal global capital that risk or reward profile for scaling African fintechs?
I think quite a lot has been said already, probably, that covers some of these topics, from the harmonization of the rules. But I think from a global capital perspective, we are still very excited about Africa. I think in spite of the fact that there's been a 40–50% decline from the peaks in 2021, capital will come back if there are opportunities and if the structures are right that actually show the risk-reward profile is the appropriate one. Some of the structures that would help sort of show that fintech can scale would be bringing down the cost of scaling. At the moment, it's incredibly expensive to scale across different geographies. We talked about the harmonization of the different regions and regulations. If we have no harmonization, that would help with the scaling. And then thirdly, to be able to attract more venture capital into Africa, we need to be able to show the returns. We need to be able to show the liquidity. We need to be able to show how exits will happen. So I'll just briefly touch on them. First, we talked about bringing down the costs. Typically, if a business is trying to scale to different markets, it has to set up completely new in the new market, has to do onboarding in that new market, it has to hire in that new market, has to set up operations and get its compliance right in those new markets. But with the advent of AI and cloud, setting up in new markets has become a lot cheaper, a lot easier. You can actually achieve this now with much leaner teams. So you're seeing companies scale to new markets earlier than they ordinarily would be able to. So we're quite excited about that. Secondly, on the regional harmonization, we are beginning to see that some of the central banks are now sort of thinking about how to harmonize their regulations, how to have common practices in place. Historically, there was a lot of risk attached to investing in fintech that's looking to scale because, from one market to the other, regulations can change very, very quickly. But that's sort of reducing now. We're also seeing a lot of innovation, like stable coins that are helping to sort of help cross-border settlements. And that's, again, making it a lot easier to scale across different currencies. And then you're seeing new bodies like PAPs, for instance, that are really helping in terms of making sure that there are payment infrastructure rails across different markets that, again, help with different sort of payment instruments and settlement. And then thirdly would be on the point on liquidity. Historically, there just hasn't been much liquidity. But I think we're becoming a little bit optimistic about that possibility. We're seeing more secondary transactions happening. It's still a long way away, but I think people are recognizing that secondaries are a valid way to actually achieve liquidity. And not everyone is chasing IPOs anymore because that just really doesn't exist as well. But to be able to achieve those secondaries, to be able to attract growth capital into those businesses, they need to be able to scale because people don't want single country risk. They want to see platforms that are across different geographies. Yeah. You're seeing more M&A activities, even though still very early, but you are still seeing those sort of activities as well. So I think overall, we're quite excited about the direction that things are going. I think the structural shifts will take time, but I think most of the VCs now are really focused on ensuring that they can support their fintech portfolio companies with sort of scaling, getting the unit economics right, of course, in their home country, and then scaling, thinking about liquidity and thinking about how to actually be able to demonstrate liquidity early on as well.
Amazing. So, following the segue into what you just mentioned about cheaper and faster regional scaling, regulatory harmonization, and liquidity pathways, I'm going to bring the question back to Brian here. So, Novistar invested for both returns and impact. With the current market pressure for profitability, how do you successfully guide your portfolio companies to maintain a commitment to their financial inclusion and social value, without obviously sacrificing, the unit's economies required?
Yeah, no, thanks. I like that question because it implies that those two things can't coexist.
Hopefully.
But we obviously have, I would argue otherwise, right, with lots of evidence from our portfolio. I think for us, impact is just another way of saying value or value add to the many in Africa, right? Because we are typically investing in companies where the problems being solved are so fundamental, they're perhaps even underappreciated in markets like where we are today, right? In where maybe financial services, by and large, are solved. I say this cautiously, but healthcare, you know, education, at a basic level, right? The solutions, mostly government funded, or at least government-led development. And then private sectors come in and sort of accelerated or innovated on what has already been built by the government. But in Africa, a lot of the things that our companies are solving are things that are problems that the government perhaps should or has solved in other markets. But you know, education, transport, mobility, how people move, those are things that governments do, but everyone sort of consumes. And so it's not a luxury to provide financial services to people. It's not a nice to have. It's a key part of how people live and operate on a day-to-day basis. And so when we invest in a money point that's doing payments and credit and insurance and all sorts of things, it's not because poor people need financial services. It's because everyone needs to pay for things, needs loans to unlock things in their life they want to buy, and that's just everyone. It's just a normal thing, right? So it's not charity. The beauty of the companies that we've been able to invest in, by and large, that are trying to do both, is they solve, or the innovation happens right at the edge, where you're trying to make the best quality, most affordable, most accessible product that everyone can access. And that cuts across sort of income streams or economic segments, right? So if I have a great financial services product, it doesn't matter whether I'm a billionaire or I make $5 a day. It's a bank, it works, I use it, right? And that's how a lot of our companies are able to scale across sectors, across geographies, because they're not solving just for a specific type of person, they're solving for most people. Or sorry, they're not solving for a small group, they're solving for most people. And when things become difficult, like they have recently with inflation in Egypt, Kenya, Nigeria, wars, etc., people actually default to the cheapest but best quality options. Everyone does, right? And so we end up being a beneficiary of everyone migrating. So when the government decided that they want cash to be available in Nigeria, guess who benefited the most? It's OPay and MoneyPoint, because they had the best infrastructure for payments and cards for the mass market. When the government banned motorcycles in Nigeria or in Lagos, or required them to be a certain specification, Max became the go-to provider. When the Kenyan president has said, we want to electrify everything, we want Kenya to be a champion or the leader in sort of the climate revolution in Kenya, and we're going to back companies that are sort of leading the charge there. Cocoa Networks, which does clean cooking, Basigo, which does electric vehicles, Greenwheels, that does two-wheelers, became the champions in that space. And this is for everyone, right? It's not just for a small group of people. So we think the sweet spot is actually that impact and commercial, because venture requires scale. Scale in Europe and in the West is the middle class. Scale in Africa is the mass market.
Yeah.
And so if you can't serve the mass market in Africa, you have no scale. And so you don't actually do venture.
Amazing. Thank you so much for that. And with that, let's go to our rapid fires. We have some more time, so we can actually do a little more discussion here. So I'm going to throw this out there. I know it's a little bit random, but then I just wanted to know, so in the spirit of, because we started our thing with leapfrogging and leading, in the spirit of leading and not leapfrogging, the African fintech sector will deliver its biggest breakthrough in the next 3 years through. So I would like if you can complete that sentence for me. Let me start with Hannah. Yeah? Okay.
So we'll be able to do that by keeping it simple. Just coming from what Brian has said, keep it simple. What does the mass market need? Identify that needs. As an example, like what he said, financial services. They need a saving solution. They need an investing solution. They need insurtech, like what they were saying. So keep it simple. Deliver for the customer what they need. Already the basic items that are there that are fundamentally enabling savings. As an example, women have women groups that they are saving. On funerals, there's WhatsApp groups that come in to be able to come in and crowd fund for the funeral costs. Already we have fundamentally some kind of structure going on. So keep it simple, provide what the mass market needs, and you'll scale inevitably. But if you get into the complexity of fintech and don't keep the customer in mind, then you're not going to scale.
Very true on that point. Can I ask you the same question? So in the spirit of leading and not leapfrogging, in terms of the African sector, where do you see the biggest breakthrough in the next 3 years?
This is actually a very interesting question, and I've spent the last few minutes trying to figure out what that would look like. Having seen so many deals across the continent, for context, our Fund 1, we had 133 companies in our portfolio. In Fund 2, we have about 31 across Africa. And you'll find a majority are fintech, so I get to see lots of things. I would say that the fintech of the future would be maybe something that looks like an infrastructure as a service or infrastructure as code, for lack of a better way to describe it. And this is, anything that enables businesses set up, say, banking services on a whim. You don't need to understand the tech stack and all that. Anything that enables people to set up compliance, digital identity, and KYC very, very easily. I think that is what the fintech of the future should or will probably look like.
Amazing. So hopefully with AI as well, it can also help founders to be able to generate those products as well. Demola, let me ask you a different question. So African fintech is praised for financial inclusion, but it must also be profitable. So from your firm, how do you define a truly successful African fintech?
Yeah, I think we think of both lenses, and we look at businesses from the both lenses. We don't think that they're competing interests. I think Brian said it well when he said that you don't do venture without scale, and in Africa, it's about including as many people as possible into that business. So I think if you chase after companies that it's just purely profitability and not necessarily scale, that traction is pretty shallow. And ultimately, we don't think it creates sustainable growth. I think the kind of businesses that we want to invest in are ones that get those sticky customers from as wide a scale as possible that are really driving sort of financial inclusion. But at the same time, you don't just do financial inclusion without profitability at the same time as well, because again, it doesn't create that sustainability. The economics don't work, and you're not able to attract follow-on capital and so forth. So for us, it's very much profit with purpose. We looked at both the profitability side of it, but also the impact side and the scale.
Great. Frankie, let me come to you. So following what Demola had just said, so the Digital Africa is now, which is our theme, it rests on strong infrastructure. Beyond just mobile penetration, what is the next infrastructure frontier from your point of view?
That would be reliable electricity in
Yeah.
It's simple, really. It's pretty basic. For example, if you cannot charge your phone because you don't have electricity at home, you won't be able to send that e-money to your relative based in another city.
Yep.
Now, that may sound ridiculous to you, but I'm from Madagascar, as you know, and power outages can last up to 12 hours in a single day. So that's one of the reasons why there are so many protests currently ongoing in Madagascar.
Yep.
I just learned that the president has finally left his seat. But now we have a military junta place, so maybe it's not that good. But yes, it's pretty simple, basic electricity that is reliable. It's, for me, important.
Yeah.
Just to add to his point,
Please go ahead.
if you plot the map of developing countries, you will find that power is a constant factor. So there's no development without constant power.
Yeah, yeah. I think we do agree, yeah? And do you want to add to that? Since, I mean, you decided to...
Oh, I picked on the word that you said, digital Africa is now.
Yes.
I think that it is really now. Our biggest problem on the continent is very fragmented. So it's happening in various, subspace and spaces across the continent. People will say, North Africa does, decide to do their thing because usually they expand to, the Middle East. East Africa is separate, Southern Africa, they just do their thing. The biggest problem we have on the continent is that we are so siloed in our own little market, and we need to figure out how to start talking to each other, because scale cannot be achieved properly if we don't start seeing ourselves as one economic block and start working together.
Yeah. Also, almost like what he was talking about, harmonization. I mean, we're talking about regulation. He was talking about regulation there, but it really cuts across a lot of things. And maybe I'll allow you to give 1 minute each to everyone. So Digital Africa is now, just, in 1 minute, tell me, give me your opinion about it.
Well, about Digital Africa is now?
Yes, we're talking about fintech and innovation. We've talked about embedded finance, insurtech, we talked about humanization and infrastructure challenges, but Digital Africa is now. Yeah,
and I mean, I don't know if it's now. It's been around for a minute, right? Now it's getting spotlight, but it's been around. I think M-Pesa is obviously one of that part of that story. I think for me, the mega trends are obvious, right, in Africa, and that's I think why we're all sitting here, because we see the opportunity, we see the demographics, we see the gaps, and we see the opportunities to leapfrog. And technology inevitably becomes a big enabler for that. I think Digital Africa is now because both from a consumer perspective, but also from an enabler, all the AI data centers should be in Africa, frankly, and powered by solar, because we have, the best ROI on any solar panels that you could put anywhere on Earth, on the continent, right? And we still don't do that. Yep. And so I think we need to think about Digital Africa holistically. I think we focus the conversation a lot on the consumption side, which I think is important. The infrastructure side, I think also, but there's a whole part of this equation, which is the thing that powers all the reason we're able to participate in the digital economy. And I think all of that should come to the continent. And if you do, then you begin to unlock things like energy, for example, because you need the reason we're not able to scale like mini grids or solar power to everyone is because it's too expensive, and that's because we don't have a large off-taker. But if we start Bitcoin mining in Africa, if we do data centers in Africa, we bring down the cost of power, then we can pass it on to everyone. That's how other parts of the world have grown. And so we need to think about what are the next big consumption requirements that the world needs and has, and move all of that to the continent and make it green and sustainable, and unlock the opportunity for Africa.
Thank you so much. Hannah?
Digital Africa is now. Let's build for value for the customer. Let's build value for the mass market, and financial health will be an automatic thing that comes up after you have built. So let's talk, but let's build more. Amazing. And let's create value for the customer. The uptake will be automatic.
Great. Yeah.
Digital Africa is now. Every person in this room, every one of you has a role to play in it, which means you can advocate for founders in rooms that they can't get into. You can invest where they're raising money. You can talk about the innovations you're seeing on the continent. Our biggest problem in Africa is that we don't know how to tell our stories. We don't know how to toot our horns. You speak to, again, I digress, you speak to an American founder and he's like, I'm building this for the world, right? Speak to an African founder, depending on where they're from, and he tells you, I'm building this for my small community. So we need to also mentor them, talk to them, teach them, tell the stories, because everybody has a role to play in whatever version of Africa we have today. And it's our responsibility to change the narrative on the continent.
Great, that was really lovely. Demola?
Yeah, no, you stole my thunder. I think that's exactly my point. I think it is there's so many pieces to the puzzle that need to be solved. The capital, we need to be able to attract the right kind of capital to Africa to be able to support the infrastructure, the innovation, and so forth. And it doesn't mean, copy and paste from what we see in other economies. We need to think about what exactly is the right kind of capital structures for Africa to be able to support innovation. Governments and everybody in this room and everybody has to be able to support entrepreneurial pursuits. We need to create that global mindset, that risk mindset, so the innovation thrives, and that comes down to everyone. We need founders, we need education. There's so many pieces to the puzzle, but it's very exciting as well because we have a lot of ingredients to succeed.
Great. And lastly, but not finally, but Frankie, Digital Africa is now.
Digital Africa is now, I think, requires good internet connectivity as well. Now, to put that in context, I think in Africa, in Francophone Africa at least, internet connectivity is quite expensive. So if you have the minimum wage, for example, in my country, you will not be able to afford, the internet. You cannot pay for broadband internet with the minimum wage in the country. But what is interesting is that we've seen at the firm clients that do propose solutions regarding, internet connectivity. And for example, you have these low Earth orbit satellites kind of thing. And yes, if that can happen, then yes, we would be digital across Francophone Africa and the entire region.
Thank you so much, Frankie, and thank you all for being part of this session. Thank you so much.